So Andrew, in one of our prior videos, you asked a very good question of if an annuity was like a life insurance policy. That was a very good question to ask. And I decided that because it was such a good question, we should do a video on it, because I know that many people out there may have that same exact question or same confusion about those two plan types. And although they do have some similarities, they are absolutely not the same. And so we're going to talk about that in today's video. An annuity versus a life insurance policy. So we're going to talk about the similarities and the differences between those two financial products. So stay locked in. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to make the difficult and confusing process of retirement simple.
Absolutely, Andrea. And we do this by incorporating a team of strategic partners ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a retirement roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So Andrea, both annuities and life insurance should be a part of most people's long-term retirement plans. Now, both an annuity and life insurance do carry with it a death benefit.
So Carson, if I have a life insurance policy, why would I need an annuity? Or if I have an annuity, why would I need a life insurance policy?
Another good question. I see you have a lot of those. Okay, so that's really good. Well, here's the really good lowdown with that question. I'm glad that you asked that one for sure. Well, when it comes to a life insurance, you're basically purchasing a life insurance in case you end up dying too soon. You would purchase an annuity, Andrew, in case you live too long. So in other words, life insurance is going to protect your loved ones in case you're no longer around to fulfill those financial obligations. Whereas an annuity is going to protect you from outliving your assets so you're not a burden to your family. So that's the main differences between an annuity and a life insurance policy. And we're going to go in a little bit deeper in our video today. But before we do that, there are always two rules to retirement income that we have to give you. And Andrew, what are those two rules?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
So now let's really go into Andrew's question on our prior videos about the differences between an annuity and a life insurance policy. So as we talk about, permanent life insurance versus an annuity, we're going to first start out by talking about how these plans are very similar and why some people might get them confused. Both contracts will be offered by an insurance company to the policyholder. So you will have these contracts offered by an insurance company to a policyholder. Both of these plans will provide you tax-deferred growth, where you can grow that money tax-deferred. And if you take out more than what you've put in to a permanent life insurance policy, you could have some tax consequences on the back end. Much like if you put money in pre-tax in an annuity, when that money comes out, it's going to be taxable as well. Both will have fees or surrender charges if you decide that you want to check out of these plans before they are actually at their maturity date. So they both can have fees and or surrender charges that can be prohibitive. Both of these plans are going to be able to provide a death benefit to your dependents. Both can provide you with supplemental income for your retirement, and both can be funded with a lump sum payment. Now, with all of these similarities, you can see why some people might get an annuity confused with a life insurance policy, but there are some vast differences with those plans. For starters, a life insurance policy is really there to provide income for your dependents in case you die too soon, whereas an annuity primarily is built to provide you income in case you are living, you and your spouse, by the way, in case you live too long. You don't want to be a burden on your family. An annuity is going to be more appropriate for you in that regard. Life insurance income is provided with policy loans, and you can take that tax-free, but there is a limitation to how much you can pull from that life insurance policy. Whereas an annuity, when you put money inside of an annuity, you're going to be provided with income periodically, whether it be monthly, quarterly, annually, however you decide, but you're going to be provided that income either for a period certain if you decide you only wanted that income for 20 or 30 years, or you can also choose a lifetime income benefit option. When it comes to life insurance, you do have cash value that builds up, but over time. So for instance, you may put $1,200 a year into a life insurance, a permanent life insurance policy, and come to find out that there is really little to no cash value inside of that policy because of the fees and expenses. When it comes to an annuity, any amount of money that you place inside of that annuity, it is going to be immediate. You put $100,000 in an annuity, it will be $100,000. If you put $100 into an annuity, it is going to be a $100 for you. Life insurance, usually you're going to have to pay a premium for that life insurance plan. It may be monthly, it may be quarterly or annually in order to keep that life insurance in force. Whereas with an annuity, you can purchase it one time. You have, $25,000 or $50,000 lying around that's not really servicing you the way you want for your retirement. You can just simply buy an annuity with it and pay once and never have to put anything else in it. Just let it sit and grow according to whatever the terms are within that annuity. Life insurance also have death proceeds that will pay to your estate tax-free. So when it comes to the annuity, that is not the case. Whatever the death benefit amount of that annuity may be, the proceeds are going to be taxable to the estate. Also, with life insurance, you do have to qualify to purchase it. So if you're not in good health, you cannot have life insurance. But if you don't have to have any health qualifications when it comes to an annuity, you can be 120 years old and have survived COVID, cancer, diabetes, and everything else above, and still take your money and buy an annuity. As I like to do in my videos when we're talking about one product versus another, I always like to show a chart of what you might decide to choose depending on your situation. So if you want to invest without any limitations whatsoever, an annuity is going to be more suitable for you. A non-qualified annuity, and we talked about this in another video, so there are different qualifications for annuities, but we're primarily talking about a non-qualified annuity when you're wanting to invest any amount of money that you would like. Because with a life insurance policy, believe it or not, there is a certain amount that you can put in there. They have a thing called a MEC. It stands for Modified Endowment Contract. And if you put too much money into that life insurance policy, it will then become a taxable plan for you. It no longer serves the benefit of what it should be, which is what the IRS considers as a death benefit. So you can't put as much money as you like into a life insurance policy, whereas with a non-qualified annuity, there are no limits to how much you can put inside of them. If you want a tax deduction, then you're also going to want to look at a type of an annuity. A qualified annuity, in this case, will suffice because contributions made to a qualified annuity are made with pre-tax dollars, and therefore that will give you a tax deduction when it comes to you paying taxes on that income during tax season. If you don't have any working income, any one of these plans will be there for you. So you don't have to have income in order to set up a life insurance policy or a non-qualified annuity. So that's a perk for both of these plans. If you want tax-free distributions to your estate, of course, life insurance is going to be the way to go there. Life insurance proceeds go to your estate tax-free. If you want to have a guaranteed paycheck for life, you're going to want to choose an annuity. Any type of annuity will allow you to have a guaranteed paycheck for life. And so life insurance, although you can take income, there are no guarantees that that income could be for life. The only way you can utilize a life insurance policy to do that is that you do what we call a 1035 exchange into an annuity policy. And then at that point, it's just an annuity with the cash value from the life insurance. And then it will pay you for life in that sense. If you have poor health, then you might not even have a choice, but if you want to put money away for your retirement and do some things that may have a death benefit with it and so forth, then you're going to want to have an annuity if you don't have good enough health to qualify for life insurance, because there are no health requirements to buy an annuity. With all things, all products, no matter what your situation may be, always please consult with a competent financial advisor or a tax advisor to make sure that they can guide you properly into what choices that you need to make. So I really hope that this video gave you some insight into helping you understand the differences of having an annuity versus having a life insurance policy. Please always note that these videos are created for educational purposes only, and you should always consult with your own personal financial advisor, or tax advisor about your own personal situation. For more information on this topic or any other topics that we've covered in our prior videos, please feel free to leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.